Good day, guys. Welcome to trading. Uh, I had to change the name of my account to Forex Walker, so I'll be saying different things from before. Today, I decided to talk to you guys about the famous Wyckoff schematics, and the, this one is they call it what the inverted shape. There's another shape that is upside down compared to this one. This spring becomes the U-turn, and but those things are not important. What is important is that you know as one design. If you know how to name this very design, then you just need to flip it and know the opposite of what this is. You don't need to learn what a U-turn is. We don't have a U-turn here because it's on the inverted side. So you just need to know one design. Uh, I am a long-term trader, so I don't really name my Wyckoff schematics. I just look at where I can see where the market is taking me out and where I expect to see the spring and the test. These are the two things that I trade. This is where I would stretch my feed all the way down here, and if this part does not give me the 50% feed, then I would extend the feed from here down here, and this would be the 50% feed, and the test will be there, and I'll hold the trade just like how I held the pound SGD and the pound CAD. So this is what they call the Wyckoff schematics, but this you don't need to learn all of these phases and complicate the whole thing, because you're going to be drawing and drawing and drawing. If you don't know where the market fundamentals are headed, you will have an issue with the Wyckoff schematics. So what you cannot trade Wyckoff schematics without taking in what the market fundamentals are doing. This is just a structure that remains behind after the things that are done by the market makers. So let me explain to you what I mean by market makers. Let's say uh, let's say macroeconomics tells you to buy the currency here, and the currency comes back. What happens to it? It takes you out. This is where you were supposed to be in profit. It comes, it collects your stop loss, and even though macroeconomics told you to buy here. So this is the reason why I was telling you guys that when market fundamentals is telling me to buy a currency, when it's telling me to buy a currency, I start preparing for sales. How do I prepare for sales? The market will be buying for like 3 days, and somewhere up here it will start to sell. So if you look at the distance from here to here and the distance from here down here, you can see that more money was on the sell side. So preparing for sales will help you to take out the buyers who were trying to buy the market here, the buyers who had the stop losses here. You're able to take them out and trade with the market makers. And even though the market decides to take off, eventually it takes out the stop losses here. Remember, the market makers, they make money when they trade in the opposite direction of the market, in the opposite direction of the fundamentals. That's where they make money. And their job, when they move the market, they don't move the market because they want to make money. They move the market because there are many traders who have sell stops up here. So if they have sell stops up here expecting the market to come back to this level, come back to this level and and enter some kind of an order block here and sell the market, what they do is that they collect their stop losses, they stop them out before they send the market in the actual direction where the order block traders who are selling here, they take the market in the direction of the guys who were selling here. So after stopping them out, that's just this thing called Wyckoff schematics is a frame or a schematic that remains behind, that is left behind by the market makers when they're doing what they're doing. And I was telling you guys about the first touch, the second touch, and the third touch, uh, doing whatever it does. This is what I mean by the first touch, the second touch. Oh, I forgot this thing when when I have a lot of these things open, it does not want to activate these things, but that's fine. So this line here is what I'm talking about. So normally when I'm sorry for that. Normally when we do, let me try to drop this guy lower like that. Okay. Uh, I always tell you guys that on the first touch, the second touch, the third touch is always this thing does not want to move. I hope you can see it from here. Let's move it here. Let's move the whole thing here so that you can see it. I'm doing other things on this laptop, so it does not allow me to be able to do what I do best. So when I say the first touch, the second touch, the third touch manipulates, I'm talking about the spring. This is just something that happens all the time. So let me just take this whole thing back to where it comes from. So most of the time, the third touch will always manipulate. It forms what we call the spring, and this guy becomes the test. So what we do is that we set up. It won't do. It won't. It won't draft the feed. So my feed would be somewhere here, halfway of this length of this, somewhere halfway here. That would be my feed, and this would be the 50% feed. The test would be there, and that's how I take off with the market. And what is important with Wyckoff schematics, let me show you how we normally use Wyckoff schematics. So here you can see that these fancy drawings are not really important. What is important is compression. Is that we move into a compression. Let me try to make a drawing here and see if it works. So what is important is that the market moves in a compressed channel like that, and it does not escape out of the channel. But once it starts to escape, you can see that now we're having a break out of the channel. This is what we call the expansion. Once you break the high, once you break from the high, it is it will always happen that we break the low because price is expanding out of the compression area. So once you see a break of the high, you know that a break of the low will happen, and this is where you get the test and the market takes off. It has to break this high. It has to break this high, and after breaking this high, that's when it can do the test, the retest, and take off. This is just something that happens all the time. This is the nature of the market. This is what we call Wyckoff schematics. We are compressed in a channel, and then we break the high and the low of that channel. Remember, I was telling you about how an order block is created. It's created by breaking the highs first and the lows second, and this becomes a valid order block. That's how we end up with a valid order block. And the market comes back to test the order block, and then it takes off. So this is the system that I use when I trade. This is the system that I use. So what is important here, you need to understand the work of schematics. Forget about this. Just look at compression and the break of the highs and the lows of the compression, and the market takes off in the direction of the market fundamentals. If you don't know where the market fundamentals are headed, then you don't really know where the market, well, you will see the breaks, but you cannot tell where the market is headed. By the time we get to where the market is headed, you've lost money. You don't have enough money to invest in that long-term move. So this is the same thing. The market is compressed in a channel, and then it expands out of it. When it breaks the high, it has to break the low. And once it breaks the high and low, that's what we say when, that's what we mean when we say the order block is validated. Why is it validated? Because this is the entrance of volume. Here the market was stagnant, volume came in, the market had enough strength to break out of the channel above and below. We call this volume. And the order block is validated, the test will come back, and the market will take off. So this is when it's ascending and descending. So the same thing, it's just the same thing, it breaks out. We call it volume. Okay, myself, I call it volume. I don't know what other people call it. Some people want to see volume in there's a an indicator that measures volume down here. I don't measure volume from down here. This is my volume. Once I see the high being taken out, this high being taken out, and this high being taken out, this low being taken out, then I've seen my volume. Now, what is volume? Volume is when you're an employee and you're working and you cannot get paid before your bosses get paid. Uh, so you need to wait for the bosses to get paid. When you see most of the companies paying your company, then you know that you're about to get paid. So that's how I look at the market. The market is a business. So when the market makers are taking out some retail traders here, they're making money, and they come down here, they collect more stop losses. After collecting these stop losses, they come down here, they collect more stop losses. That's the time that I prepare myself to enter the market, because the bosses here, they got paid. The bosses got paid here and here. So up here and down here, the bosses got paid. Then I prepare myself to get paid. That's how I trade the markets. I don't just jump into the market and say the market is moving higher, then I'm also moving higher. The market is moving down, I'm also moving down. No, I cannot do that. I need to wait for the bosses to get paid, let them collect the stop losses. When the market comes down here, they collect stop losses. Then I know that my bosses got paid. Then I prepare myself to buy the market. That's how I trade. If I enter the market here and expect and say this is a valid order block, okay, it is a valid order block, but it will only become valid when the market breaks the low, then it breaks the high, then the order block is valid. It cannot be valid because we only broke this low and the market did not come back. When it breaks the high, it has to come back below this guy here. So that's just how the bosses get paid. This is what I call Wyckoff schematics. Uh, this one is the calculated version of this thing. I will be showing it to you on the next episode. We just ran out of time, and yeah, I'll see you guys on the next episode where we talk about the calculated part of Wyckoff schematics. My account at the moment is called Forex Walker. It's called Forex Walker, and I will draft it on the next episode so that you can see it. I tried to change some of my videos into Forex Walker, and the entire YouTube channel will be Forex Walker from now on. Thank you, guys.